when I was teaching personal finance to
Yep.
high school kids, I would ask them, why do people invest in the stock market and why don't people invest in the stock market? And one of the reasons always that came up for why people don't invest in the stock market is it's too risky.
Mm.
You're going to lose money.
You're
It's
gonna lose money.
risky.
Yep.
What if the company goes under? What if risk? I'm not going to put my money in that. That's like gambling. I even remember hearing.
Okay.
So how do you teach someone that it's not risky or not that risky? You got to look at the history of the stock market. So today we're going to use Jeremy from the Personal Finance Club, hit two of his graphics. I highly encourage you later. Please don't do it yet. Please watch our video. It'll be a short one. But check out his website. It's called the Personal Finance Club.
Yeah.
Because he makes great graphics. They come out once a week. Usually does about 4 or 5. And it's just a good way to learn about personal finance.
Absolutely. And we'll link it down in the description.
Yeah. So this one jumped out at me for the history of the stock market. He's looking at the S&P 500 and the history there. And as you can see, if you invest for one day, you have a 53% chance that it goes up. So it's basically a coin toss.
Yeah.
If you keep going, a month is 62%. If you fast forward to 5 years, 88% of the time the stock market is up in the S&P 500 if you've invested for 5 years. So yeah, there is 12% of the time it's down, but those are really good odds.
Yeah. I'd go to Vegas with that.
Yeah, exactly. Roll those dice. Roll those dice. The one where you're guaranteed thus far in history, obviously, because everything can change in the future.
Sure.
Maybe the next 15 years is the first time it goes down. But in history, if you've invested for 15 years in the S&P 500, your money's up.
Nice.
So this is the history of the stock market. Now, what you invest in obviously matters too.
Yeah.
If you're not investing in the S&P 500 index fund and choose individual stocks, that's where it's kind of maybe more gambling, if you want to call it.
Yeah, if you're doing a little bit more solo stocks and you've got Kmart and Sears, you're not doing so hot.
Enron,
right?
I remember
Enron
went bankrupt.
Yeah.
So it obviously matters what you're investing into.
Yeah.
So this is one not this exact graph, but I would teach my former students the history of the stock market and why over time it goes up so far.
Nice.
The second graphic I want to show you guys that is really good from his website, Jeremy's website, is this one. And again, these will be on the show notes so you can see them better because I don't know how well they're going to show up for you. But this one is, here's why the S&P 500 doesn't return 10% every year. The average has been 10% every year. And this is based on data down here of about the last 100 years. Okay, rounding numbers.
Yeah.
This I love because it shows you, holy cow, all these years, so many, the stock market's been up for the year 20% or more. That's the biggest bar on this graph.
It's gone up.
And that's one of my favorite pictures. I love these graphics of this guy sticking out his tongue with a dollar, a money sign. These are great years.
He's making money.
6 times in roughly the last 100 years, roughly. 6 times the stock market has gone down over 20%. Obviously, during the Great Depression.
Yep.
The most recent, 2008, was the housing crisis, I think.
Yep. Great financial crisis, housing market. Yep.
So this is also the history of the stock market, the S&P 500. Any other interesting observations, Justin, that you want to make from this?
Well, I think when you look at this chart here, the majority of it is really high, right? But then you do have some of those lower areas, and that's why it's the average, right? So it's just averaging it out.
Exactly. That's why you shouldn't get too excited or too worried after 1 year.
Yeah.
Like 1 year it could go down 0 to 20%. It did in 2022. I don't remember the number.
Yeah.
But don't panic. Know that you're in it hopefully for the long run, because the previous graphic shows you if you're in it for the long run, you have great odds of coming out ahead.
Yeah.
Also, everything on that side, 0 to 8, is positive. Everything on this side is negative, bad years. And these are estimates about numbers. 30% of the time, the stock market's gone down. 70% of the time, it's gone up. These are approximate averages. I didn't do all the math, sorry. I didn't pull out the calculator, but you can see these are only the bad years. So if you're worried about the stock market and how it's going to do in the future, you're new in investing, or you're a little worried about any kind of recent things, most recent big one being 2008, where it was really bad, just remember the history of the stock market.
Yeah.
And trust that if you're in it for a long time,
Yeah.
you're going to be in a really good place.
I think that's the part, right? It's a long-term investment. It's not a what was that first chart? A day, 50%
One day
coin
I can
toss,
go back to it. Yeah,
right?
50%. If you put in $10,000,
It's a 50-50.
yeah, or you put it in for 1 year, there's 26% chance your money's going down. It's still going up 74% of the time in 1 year.
Yeah.
So you're right. It's if you want to gamble, I guess you can gamble.
Give it some time.
Yeah.
Right. Just give it some time. More.
Exactly. Yeah. So some great graphs brought to you by Jeremy from the Personal Finance Club. Definitely check out his website. He has other good things there too.
Cool.
We just hope you learn about personal finance more than you already know, and keep making good decisions so you don't have this money as a stress in your life.
Right.
Ideally. That's what we're shooting for. So
awesome.
All right. Thanks, everybody.
See ya.
Take care.